The next session of the afternoon is going to focus on a very important topic, the future's regulatory landscape. I would like to welcome our moderator, Ron Finberg, Director of Global Regulatory Reporting Solutions at S&P Global, to introduce our speakers. Welcome, Ron.
Thank you. Thank you, Tessa. And thanks for everybody for being here for this wonderful panel. Regulation is obviously the most exciting part of the day. And I have to really say thank you to the organizers, because I think this is the first year they didn't put it right after lunch when everybody's really tired and falls asleep on it. So this should be an exciting one. Before we get into the nitty-gritty details, and we do have some surprises for our panelists as well. They have some random questions that I got ahead of time that they're not prepared for, even though they know most of them. So I want to give everybody the opportunity to introduce himself. Tony, let's start with you.
Hello. Hello, everyone. My name is Tony Petrov. I'm Chief Legal Officer at SumSub. We are a KYC provider, providing solutions for KYC, KYB, and other customer due diligence procedures. That's it.
Konstantinos Konstantinidis from FAI Comply. Regulatory consulting, we do what it says on the box, really, compliance. That's it from my side, really.
Alexandros from MAP Group. We are a financial services advisory group dealing with regulatory compliance. Also provide some solutions, RegTech solutions for compliance, and generally other support services in relation to financial services.
Hello. Hello.
Talk louder.
Oh? Hello, everyone. My name is Evdokia. I'm coming from Salvus Funds. We are a boutique advisory firm. We are dealing with licensing, regulatory compliance, internal audits for cryptos, for funds, for investment firms, Cyprus, as are the other guys, and around the globe. Happy to be here, and thank you for the invitation.
Sophie Gerber. I'm the co-CEO of Traction Fintech, which does EMIR and MIFIR and SFTR reporting in Europe and also for some other jurisdictions around the world. I also run a firm that has legal and compliance services in Australia for the ASIC regulation.
Great. All right. Thank you, everybody. So usually these events take place yearly. We had the opportunity, the last one in Cyprus was actually in October. So, we have only that 6-7 months between these two. So we left that event, as typically happens with pretty much every panel that takes place. It becomes a crypto panel. You talk about one thing and then they start talking about crypto and then everything goes there. So we left that event saying, CySIC launched this new initiative. They're going to start having crypto-based regulations. Or licenses, and it's going to change the entire industry. And we had a change in the chairman at the same time, and there was a lot of people left that event, really talking about it. And I know the panelists had people coming up to them and asking them questions. How do we sign up for this? But I've heard that since then, nothing's actually taken place, and as of yet, there hasn't been am I correct? There hasn't been a single crypto license? Okay, so, let's figure out. Let's start the Konstantinos. What's going on there? What happened?
Yeah, you're correct. There has been applications submitted to the regulator for the registrations. However, we're hearing rumors of some of the bigger boys getting regulated first, but there hasn't actually been a registration yet. Now, from our side, we think this is because instead of some other sort of more competitive registration jurisdictions like your Estonia, Lithuania, and Poland, we believe that CySIC is taking a view with the Markets and Crypto Asset Directive that's coming in. So they're trying to put the foundations in place now for the registrations when the directive eventually comes in to already have capital in place, AML officers, a full board, that substance is required. And maybe that has, in addition to the 19-something investment firms that they have in a queue for licensing and so on, sort of delayed things a little bit with the application process.
Okay, so you're still seeing demand and interest from firms to do it?
Yeah, that's correct. So there has been quite a few submitted. I don't know if there's going to be a sort of cap put on by SciSec to get a few registrations out and then wait for the next wave of regulation, or if they're just going to keep accepting applications.
Got it. And Alexandros, from your point of view of working with a lot of firms setting up, are you still seeing interest, or is it kind of weighing down from the beginning?
Yeah, I think there is interest for sure. We have also the inward notifications from other EU countries that are set up already in other EU countries, so transmitting their notification to offer their services in Cyprus. I think there was already one firm that has been authorized as a CASP in Cyprus, but not announced yet officially. This is due to because the public register of SciSec for CASP has not been launched yet. It's expected to be done in the next couple of months. And okay, because the current regulation does not provide for passporting. It's not like MiFID, where you are setting up in one EU country and you are allowed to offer your services cross-border to other EU countries freely and recognized under the regime. This will be done by MiCA. I think firms are they are selective where to set up based on where they want to offer their services to mainly. Mm-hmm. So you see Binance, for example, setting up in France and setting up elsewhere as well, because this is their primary markets.
Okay, so that's an interesting point that you made there about passporting is kind of limited in where you're doing. Because Evdokia, in terms of what Alexandros was saying, how companies are being more choosy, do you still believe that Cyprus could be this main destination for cryptocurrency, or do you think there's better alternatives out there in the EU?
Yeah, well, first of all, I agree with what the Konstantinos and Alexandros said earlier about the CASPs. I see that there is a lot of attraction for SciSec from our side. Comparing to other EU entities, the difference for SciSec is that as a Cyprus, we set up an authority for setting up a regulator for that. Whereas Estonia and Lithuania, they have the AML unit, the intelligence units that they oversee only for AML. Whereas we cater for investor protection, SciSec does that, and for other regulatory frameworks. And when MiCA will come in, all the other countries will need to authorize these or transfer these licenses to the regulator. Now, in terms of SciSec, because we have submitted the first application for CAS back in October, I will say and share that we are currently under review. There is no official registration yet. Hopefully we can get this done in the next few months. Still, we experience delays from the workload of SciSec, I would say, on CASPs, on existing firms that they already are in the pipeline to get authorized, and where SciSec already has all this experience. But hopefully we'll see this evolving, and as Alexander has mentioned, they want to choose where they have to offer the business at the moment. But when MiCA comes into force, we will get the EU passporting, so they will not really care of being in the specific country. So I believe that we will have a lot of applications coming in when MiCA is in. Yeah,
okay, so
that's for EU jurisdiction.
You're saying, so being choosy where you open it could be something that's changing in the future when the passporting comes. Okay, I want to stay on the topic of Cyprus. So we mentioned briefly before that back in October we had a change in the chairman for SciSec to Dr. I'm going to mess this name up, I apologize, to Dr. George Theokritis. So Konstantinos, have you seen a change in the view of how Cyprus is working? Is it getting faster, more agile, better answering questions?
The biggest changes we've seen is from the supervision side.
From the what side? Sorry.
The supervisory side, excuse me. There seems to have been much more efficiency in getting back to firms on things like their reporting. So quarterly statistics, MA reporting, and so on. It's almost like there's been, and Dr. Theokritis has emphasized that they are investing a lot in their technology. And basically that technology is giving them the ease to be able to monitor firms more. So they'll be able to pick up patterns, errors in your reporting. Seen a lot of firms get approached over the last couple of months for errors in MiFIR reporting, lack of data in their MiFIR, and so on. So the biggest sort of change we've seen is this sort of technology supervisory side of things, where they're able to identify more easily, and see them investing on that part of stuff.
And have you seen kind of like a back and forth when firms have been approached by SciSec, and then they'll say, can they answer back and say, okay, we disagree with something, your supervisory, what you're saying, or we want additional clarification? Have you found that SciSec, answers in the normal time, or is it still kind of gets lost in?
So in the particular situation where SciSec sort of identifies, let's say, an error in some reporting or a certain pattern, through the supervision side, the communication is really efficient. They're quite on the ball to get back to you because they want to ensure that you're doing things correctly, and there's just this huge pressure from ESMA coming in with certain, sides of monitoring from the best execution and so on. So from a supervisory side, super efficient. They are really on the ball, so people need to sort of brush up there.
Okay, that's a very good thing to hear, because in past years I've often heard feedback that firms feel like the regulators can be more of a teacher in the room and kind of telling them what to do wrong, but not necessarily working on a relationship for the future. So that's good to know. Moving ahead, so I keep harking back to previous panels, but the truth is that from years of moderating these panels and being involved with them, you really pick up a lot of little interesting trends. So one of the trends that came out in a previous one is that even firms that weren't necessarily getting registered in Cyprus still liked having their teams here, because it was, that you had staff, there was knowledgeable people and employees. And then obviously on the licensing side, you had the benefits of AML and banking relationships that you could have by being registered over here. I'm curious to know, are there other up and coming countries that you think are also doing a very good job and that brokers should know about, that could be potentially good destinations for them to be as well? Tony, we'll start with you.
Yeah, I mean, we have clients from different industries, but FX is one of them, and so we see how our clients are basically allocating their efforts in terms of different jurisdictions and how exactly they consider each jurisdiction for which purposes, et cetera, et cetera. Obviously, I mean, I'm not telling anything new. Obviously, there are jurisdictions where the license is very much important and you cannot work there without license, but it's very complicated to get this license, just such as Japan or the US. At the same time, there are some licenses that are considered as, let's say, reputable international licenses that you can use in different markets, such as the UK license or Australia license, or Cyprus license is one of them as well. Someone would also consider, of course, Malta and Dubai, but the problem with those two jurisdictions is that Malta and Dubai are right now in grey list, the FAT grey list. I think this can have some problems for the markets. Maybe not. We will see how it works with, especially with Dubai. I think the most important thing that should be borne in mind is that when you consider where to set up a company and which license to have, it's important to, first of all, to ask you a question: what audience you're trying to target. Because obviously there are some big audiences, there are big markets where you cannot work without a local license. Brazil, or let's say South Africa or Nigeria, Australia, of course. And so most of our clients, of course, they have bundles of different licenses, and they work with different markets using different licenses, and that's still a trend. And I don't see any new rising stars in terms of FX licenses globally.
Okay, and Sophie, what's your thoughts on that? I know you have coming from a different part of the world in terms of what you're seeing.
Yeah, I agree with your comments. I don't see that there's anything particularly new that's coming through. The island jurisdictions, they're still popular, but they're steadily becoming more difficult in their own individual ways. So Vanuatu's recently required some local presence, which they didn't before. Some of the other jurisdictions have increased their capital requirements and their lowered their leverage restrictions. So it's becoming more difficult in those places. Most of our clients are acquiring more and more licenses as they go along, and they're having the ASIC license with SciSec, with FCA, with Dubai. So that tends to be the standard, and a couple of islands.
The firms that are taking the non-standard approach and they're saying, let's start with an island or with Dubai. I know Dubai is a little harder to get because of the capital requirements, but are they still able to create those relationships for the banking relationships, or is it still a huge hurdle for them?
It's a huge hurdle. It's definitely a huge hurdle if you don't have a strong license sitting behind you.
Okay, and is it, I know this event has gone from probably being, 3 payment providers, and I apologize to all the payment providers. To me, I just say payments. I know there's different spectrums of them and they do different things, so I'm putting them all. They started about 3 and now it's like half the event often comes with payments. And I don't speak disparagingly about it. I know that there's very different specific intricacies that they all provide. Do they, having that different type of options out there, does that help when you're going, if you just want to start with Vanuatu, or is it you're still going to have problems?
I'm not a specialist in that sort of thing. From what we see on the compliance and legal side, we get asked by clients to provide certifications from payment providers, and they're certifications that, frankly, we just can't provide. So they used to be saying, please confirm that this person is registered, please confirm what laws they have to follow. Now the certification says, please confirm that they're following the laws and they're doing a very good job at being a broker, which we're a law firm, we can't say that about someone, we don't do that.
Got it. Okay, understood. One of the, I'm trying to see if I see it around here, but one of the logos for this event is, I think it's COVID is over, right? So that's what they've been saying. And, we're 3 years into it now, and one of the big problems that happened is people weren't able to travel around the world, and specifically for a lot of forex brokers or other just brokers in general will have ownership that's coming from different parts of the world where they've been primarily closed. So Evdokia, I'm just wondering, how has that affected, a lot of firms have taken the route of trying to buy a company out. Has that been possible if, someone from a country like Hong Kong or China might not want to be traveling because they get stuck with, 2-3 weeks of quarantine when they come back, or just in general, has there been a decrease in new license registrations from the?
I will say that the distance and the COVID didn't really influence that, even though, because COVID changed a lot on how we deal with everything. Now with the DocuSign and all of those automated systems, there is no real problem of actually signing all the documents. And we have seen also banks accepting Zoom meetings for verifications and all of that, which it's the AML requirements after all. Talking about now acquisitions, we have a lot of demand about acquisition of entities, and even from all over the world. The struggle that we see, though, is on the source of wealth and the funds. So we have to ensure that there is a good due diligence of the buyers, because if we don't do that, then it will go to the regulators and it will fail the transaction. It will fail the acquisition, and this is not good. And I'm not talking just for SISEC, I'm talking about all the regulators, because AML goes around the globe. And it's a very big thing. But in terms of COVID, yeah, we see the same demand and even more demand now, especially with the cryptos coming in, new products and new things, where people have money, they want to invest. You cannot have your money sitting in the banks. So it is interesting. Yeah.
Okay. Anyone want to add on that? Anyone? Sorry, Tony, you were kind of...
People are sitting at home, of course. Of course, they are interested in all online possible activities, etc., etc. So obviously, we see a lot of demand. In our like what we have seen during the COVID, it was just like outblast of activities, especially crypto and FX. Everybody actually gained a large share of market after COVID, and I'm glad that the regulators regulators also started thinking about streamlining the procedures for non-face-to-face identification. Because of that, they were planning to do that, but COVID kind of like enhanced this situation, and some of the countries in the EU actually came up with absolutely normal new, let's say, way of onboarding clients through non-face-to-face identification, like with liveness detection technologies, et cetera, et cetera. It's all thanks to COVID.
Okay. So continuing on that theme of onboarding clients, so unfortunately we had, geopolitics for the first time kind of fell into, our business with the Russian war with Ukraine, and a lot of firms have found themselves on the sanctions list. And I know, speaking of my own experience in S&P Global, we've had, unfortunately, a number of clients we had to terminate contracts with. So I'm curious, from a AML perspective for Forex brokers, are there certain things that firms need to have in place now to be able to handle these sanctions? I know, Tony, with your kind of focus on AML, we'll start with you on this.
Well, I mean, most of our clients, they have usually 4 categories of countries, like to determine their level of risk, in which, let's say, there is low risk, medium risk, high risk, and thank you very much, but we cannot work with you. I mean, obviously, most of the countries of the region, including Ukraine and Russia and Belarus, they were all in high risk level category before. Now I guess these paths of these countries will go different directions. So probably Ukraine will go down towards, let's say, middle risk. Something Russia will go up with Belarus. So we will see, I guess, these things. And in terms of onboarding procedures, I think there's again nothing new. Enhanced due diligence measures and possible discretion of the MLRO officers, and even lists of blocked countries can be there as one of the things that can be in this situation, I guess.
Okay, Konstantinos, do you want anything to add on this?
Yeah, so we have seen, of course, there's even more heavy reliance on people like LexisNexis, WorldCheck, and so on to ensure that you're keeping up with all the sanctioned lists, more automation and all those relative tick boxes that I'm sure somebody like SumSub has running in the background anyway. But what we have seen is a little bit more creativity in the market with investors from those jurisdictions. So again, like you said, we always seem to fall back onto that crypto asset service. So we see people sort of starting to go, okay, what is the chain monitoring thing to be able to receive crypto and backdate where it's come from, and having to look at it in that avenue to ensure that, okay, right, this hasn't come from any particular direction of people who are on sanction lists and things like that.
Is chain analysis something that regulators are asking for? Is it, people are putting out just because they want to look better or do more tougher type of AML?
I think from the firm side of things, they want to stay sort of ahead of the curve because they sort of expect it to come out, because it hasn't really been something so published by regulators in chain analysis, although you do see it in the policy statements from CySec and beyond. Just because it hasn't really started yet so much, we haven't seen a huge influx here in Cyprus, but there is, we feel it's coming in.
So it's become more of like a de facto best practice than what's needed. Okay, interesting. Talking about different solutions to be able to accommodate brokers. So I've always found, being as a vendor, that the regulators have this love-hate relationship with technology. On one hand, they tell every vendor, monitor everything you're doing, put things in place, make sure you have the best products in the world, in order that you have stuff for market surveillance, AML, transaction reporting, whatever it is. On the other hand, they're also saying, okay, how do you know that are you doing the due diligence to make sure these products are any good? Are you making, are you monitoring themselves? So it puts firms into a bit of a tough position over here, because the regulators are kind of talking on two different sides of the topic. So Alexandros, what are you seeing on this in terms of what's the correct way? What should brokers be doing when it comes to?
I think it's inevitable that firms, I mean, in general, not only brokers, CFD brokers, but especially in the financial services sector, which have to deal with a lot of compliance, it's inevitable that they have to use technology solutions to comply with the extra requirements that are coming out all the time. So, and I think regulators are actually prefer this model, and they have been publishing reports like the FCA, the EBA, ESMA, that saying how beneficial is the use of RegTech, for example, to help with compliance and the benefits that this bring, the automation, the reduction in human error, and all of those things, the automation in the KYC that Tony mentioned, of course, which can be done remotely now and all of that. But at the same time, obviously, regulators are concerned that when you use a specific technology, you need to make sure that it's reducing your risks and not maximizing your risks, or doesn't bring new risks in your organization. So yes, they are in favor of the use of technology, and being also the new theme is to become data-driven regulation, data-driven regulators, data-driven companies in compliance. So these risks that could come with the use of technology are, for example, is it a black box? How do you know that it performs as it should be? What kind of assurances? Do you have like relevance certification? Does the vendor has a relevance certification like ISO 2001, for example? I mean, has it been tested? Has been rolled out to many companies? Is this like a startup firm that is your first time deployment? These kind of things are important also for the firm itself, because you don't want to fail in your process. So when you take on a new, let's say, KYC vendor that will automate your client onboarding, you don't want them to fail in the process, right? Because that will mean less clients for you, and you don't want them to fail also because of the compliance risk that this will bring. So it's not only the regulator that should do the right due diligence and make sure they are working with the right vendor, but the firms itself should also ensure that who are they working with will be able to deliver and not as it's supposed to be, and not cause any extra risk for the firm.
Okay. That's a very good point. Sophie, do you want to add on that?
Yeah, I mean, the outsourcing of technology is very difficult, and firms are obliged to monitor and ensure that things are being done properly. But, I mean, the difficulty which most people will know is that you outsource things because the person that you're outsourcing to is a specialist. So you run a transaction reporting business. It's a really difficult thing to do. How can someone at a firm monitor the conduct of your transaction monitoring firm when you don't really know how to do it because you're not an expert in it? Because you're also, as a compliance officer, trying to monitor the AML provider, you're trying to monitor your best execution provider. So it's a difficult thing, and I don't think the quandary between the RegTech and the technology firms and the obligations of a regulated firm has been fully exposed as being potentially problematic, and also that no solution's been put forward yet. It's tricky.
Okay. Tony, you go.
Yeah, I just wanted to take this opportunity and say a couple of words. We see a certain, let's say, gap between the aspirations of the regulators when they want to see more automated solutions and new technologies in AML procedures. At the same time, there is a lack of understanding exactly how to regulate these things and how to certify the level of this technology. And therefore, we have, let's say, what we have in reality for cloud-based KYC providers is just like, okay, ISO 27001, several other similar standards, and then we have only, let's say, presentation attack standard for liveness, and that's in most cases is just it. In some countries, as just for example in France, we have a ANSI certification, which deals mostly with information security and not with the, as I say, the assurance level of the technology. So I mean, I'm not saying that everything should be regulated, and obviously regulators are not the best persons to regulate technologies because they're not experts in this, but this is just something that I would like most of the industry to understand, because they usually come to us and say, do you have certification for every module that you have? This is a very typical question, and the answer obviously will be no, but I mean, it's your discretion. You should like test us, A/B testing, whatever, and then you will get the answer. So yeah, I just wanted to make this comments.
So now I have a question for all of you here. Who here is a broker or works with technology vendors? No one here? Okay, you're very easy. So Tony mentioned that this trend, that there's talk about it, nothing necessarily final other than a few smaller countries, where the regulators are asking, saying, okay, maybe it's time we start regulating the vendors. So as a broker, keeping in mind this would probably raise your fees for technology, whether it's platforms or back office solutions, would you prefer to have your vendors having certain licenses and regulation on them? Is anyone's pro? There weren't that many hands that went up as brokers, but the ones that are, anyone looking for this, for licenses from RegTech firms? No?
If I can maybe just, instead of a regulation, would you like them to at least go into the sandboxes or go into the financial innovation hubs to at least have been tested a little bit, maybe instead of a full regulatory licensing?
Things to think about.
Just to add here that I think the main difficulty between the firms, the regulated firms and the vendors, is that the entities, the regulated entities remain responsible for the compliance. And we need technology to fulfill our work. For example, best execution, market abuse. The regulator says you need to have automated tools in place. Yes, we need to, but when you have the tools in place, let's say you did the due diligence, you approved and first of all approve this vendor that it's good, you need to know the compliance of it. As Sophie said, you do AML and you do the KYC checks, and you need to know the regulation first. For all the regulations, you need to know, and we need to educate, I will say, the people that they work in the regulated entities, so they will be able to do due diligence on the systems that they get them.
So I think the bottom line, what everybody's saying is just like a firm would really understand what their trading platform is doing, they should also understand what their back office solutions are doing, and not just taking into account that whatever they're doing is correct, but actually delving into it to understand it. I want to move off this and let's go. There's some breaking news that happened a week ago, or a couple weeks ago, that the Australian regulators for the ASIC OTC reporting put out their new updates of what's going to take place over there. So, Sophie, with these updates are happening, they're affecting transaction reporting. I wonder if you can just we're running out of time, so I'll put you on the spot here to make it quick. Are there any specific items that firms should be knowing about as this is coming out?
Yeah, sure. So, I mean, Australia generally is following the European regulations. So a lot of what's being put in place is following the changes that are being made under the EMIR and MIFIR regimes. One of them is the requirement to report with this standard called XML. It's a difficult format. It's a big evolution from the CSV format that most of us have an understanding of. So that it's really following on from what's happening in Europe rather than giving you the specifications of that. That in terms of the timing, which I thought you might want to know about, there is some discussion that is taking place between the industry bodies and ASIC, and most of the industry is trying to achieve that Europe goes first with the major changes to transaction reporting, and that ASIC follows up later, hopefully.
Okay, and with this, the Europe and bring it back over here to the EMIR refit. So Alexandros, in terms of the EMIR refit that is coming, if the rest of the world is waiting for it, do we have any idea of when it's going to be taking place, or also if you have, on your point of view, other than the XML changes, is there other items that firms should keep their minds about?
Actually, this is an area that the market participants should pay close attention to. There is a tsunami of changes coming in soon in the regulatory reporting space. I would say that it kind of touches all areas of reporting, from your processes, manuals, to your systems, technology you use, the output that you produce, the data that you hold, the data that you have to ingest, and the processing of the files. So as you know, in December 2020, ESMA has issued their new revised technical standard on EMIR REFIT. And the FCA has closed recently its consultation on the same topic. The expectation, both regimes are now different, so they have to be treated separately. Of course, at the moment, the expectation is that the first half of 2024 will be the live date for these new technical standards. We don't have a specific date yet, but firms should definitely start preparing from now, because there's a lot of changes happening from the fields, the reporting fields, how specific derivatives are treated in the report, the reporting logics, how you deal with the regulators, your counterparties. You need to interact with them and see their intentions and coordinate. The technology moving from CSV to ISO 222, for example, your manuals, your procedure have to be revised. So firms should definitely start reviewing their EMIR processes from top to bottom. This touches every area.
Okay, and we now have I'm giving a little thing here, 4.5 more minutes. So before I get to my questions, if we can even get to them, are there any questions from the audience, if anyone wants to ask anything? Is there a mic? Or thank you, Tessa.
Is done? Oh yeah, thank you. Just to quickly answer your question you asked around the new. I'm a vendor, so I run a startup. So I definitely don't want to be regulated as a fintech startup, because first of all, it's the cost of it, and we would like to innovate much faster than let the regulators to catch up the stuff that we develop. But a question to the panel is, I want to know about do regulators look at educators in terms of the educators who provide teaching to the individual traders? I heard a rumor that FCA are potentially looking to regulate educational companies. So is that something that you have heard, or is that is education or a regulation to educator companies is coming? Thank you.
Sorry, Alex, go ahead.
Okay, thank you. There is are you talking about education in the CFD, I presume? Okay. There is an ESMA Q&A paper in relation to CFDs that kind of touches this topic. If you are a pure educational content and you provide, online, let's say, educational courses, that its content is purely educational matters, then I don't believe there is any intention for it. But if you are doing more than that, like promoting a specific firm or inducing clients into trading specific products, or if you are affiliated with a broker and receive, let's say, commissions from them for diverting traffic to their website, yes, the requirement is that most likely you have to be regulated, for example, as a tied agent in this area, because you are then doing more than education, but kind of getting into the regulated area of the financial services legislation, which is promotion of financial products, advising possibly, or representing a specific firm.
Right.
So, yeah.
Just to add here, maybe it answers more of what you are after in here. SciSec will introduce this year, they already shared that, the new examination. New examination will be about investor protection, talking information. So we expect that SciSec will have this compulsory to front-end people, customer support, tied agents. So they will need to get educated, probably about the regulation, complaints handling, and what information we share to the investors before they come to us. To the firms, to the regulated entities. So we have seen this from the AML, that when they issued the AML certificate, people had to do it. So they got educated. So this was an involvement in the industry. And with this, maybe I say it, sales certification, I think it will give more comfort and, yeah.
Okay, thanks. Any other questions?
As far as I know, MiCA was supposed to come into effect in 2024. Do you know if they will implement it earlier or they will stick to 2024?
I guess we still expect the guidelines. Yeah, we don't know. We're not the commission, so yeah. We all look forward to it.
Yeah,
history have shown that nothing comes earlier than expected.
Yes.
The pattern with regulators is that it's delayed generally.
Plus that we will have AML authority in EU level coming in 2024, and I guess this might be linked to anyway the MiCA and how these will regulate and the new regulations, how these will be blended with the AML, because at the moment crypto blends. It requires only AML. When we have AML authority in EU level, then maybe they will pass through all of those regulations and how they will enforce them.
Any last questions? Perfect. So we're just right up. The time's up. So I wanted to end with the question of saying, like, what other areas of like future regulation you know, everybody in the panel is, you know, thinks other people should know about. But as time's up, I think it's a really good opportunity for everybody to now, you know, now you can all ask the different panelists and get their feedback on this question, you know, in order to know what everybody should keep their minds on. I want to thank everybody for showing up for the panel. I want to thank our panelists. It was a great panel. I learned a lot from different things over here. And enjoy the rest of the show. And thank you, Tessa, for moderating.
Thanks, Ron.
Thank you, guys.